Thanks, Nzinga. Well, the conditions of the financial support to Eskom announced today will be scrutinized by rating agencies. Moody's earlier warned of the potential implication a bailout could have on our credit rating. We're now joined by a director at another rating agency, S&P, Ravi Bhatia, on the line from the UK. Ravi, thank you for being with us. Your response to this budget speech today?
Well, I mean, when we published our report back in November, we raised the issue of anemic economic growth and sizable contingent liabilities, which continue to weigh on South Africa's fiscal prospects and debt burden. And to an extent, we've seen these contingent liabilities becoming realized in the form of the sizable support for Eskom, which has been announced in this budget. So that affects the fiscal bottom line and the debt trajectory. And alongside that, the growth numbers have been slightly revised down, and there are concerns also around the blackouts and their impact on growth going forward.
Looking at Eskom specifically, so it's 23 billion. Remember, Eskom had asked for 100 billion. Are we giving too much? Is that what you're saying? Just tell me overall, is our dealing with Eskom credit negative or credit positive?
Well, Eskom had needs, and the government has stepped in to support it. So this is definitely a support package for Eskom, but the problem is that it then becomes a burden on the sovereign on the fiscal deficit side, where we see the numbers deteriorate. So, from a sovereign point of view, it's an issue for the fiscal deficit. But, there are other factors as well. We're looking at the growth story, at the external story in terms of current account deficits as well. And the slowdown in U.S. Fed rates rise should help the external financing story a bit. So, it's a combination. We're looking at all the pictures. Also, the government came out with earlier the sort of growth package and the investment summit, which should slightly support growth, although, as I said earlier, it's been hit by the electricity and other issues as well.
To be explicit, Mr. Bhatia, does this mean future downgrades are on the cards?
Well, we have the foreign currency rating at BB and the local currency rating at BB+, with a stable outlook, and that's where we are right now.
All right, so you don't want to give too much away. You are concerned about debt. So the minister did say that it will still stabilize at 60%. That target isn't changing in 2023. Are you saying that's not good enough? South Africa is living in debt, is drowning in debt?
Well, the debt trajectory is a concern. Yes, it stabilizes in the outer years. But if we look compared to, say, 4 or 5 years ago, we've seen a big ramp up in the debt to GDP numbers, and this continues to be a concern.
Is there hope regarding SOEs? Government is certainly getting tougher, talking about chief reorganizing officers who have to be there. If there's any support for those SOEs, is that positive?
Yes, I think the plans to improve the functioning of the SOEs is broadly positive. But the question is, how did some of them end up in the state that they are? There's been sort of a lot of issues with Eskom, and now problems. But of course, the new government is addressing this. And they're working on all fronts, on the maintenance front, on the supply of coal, etc. So they are trying to improve the SOEs, and that is broadly a good thing.
Final question: do you think it would be better for us to sell some of them off?
Well, that's a decision for the government. It's at the end of the day, the SOEs have to be profitable, and if they are profitable, then either which way they support the economy and deliver their goods in a viable way. So yeah, it could be either which way, as long as they're well run and delivering what they're supposed to deliver.
All right, thank you very much for your time this evening. And that was Director at S&P, Ravi Bhatia. Not giving too much away, but saying that the budget deficit, basically the gap between the money coming in and the expenditure, we're spending beyond our means, and that is a concern. We'll talk further with our business and investor guests after a short break. Stay with us.